There is a quiet revolution happening right now in the world of blockchain technology, and most people, even people who follow crypto closely, are completely missing it. You see, for years, the conversation in this space has been dominated by one question: which blockchain is going to win? Is it Ethereum? Is it Solana? Is it Avalanche? Is it something we haven't heard of yet? Everyone is picking sides, everyone is debating throughput numbers and fee structures and validator counts, and meanwhile, a completely different kind of problem has been growing in the background, largely ignored. The problem is not which blockchain is the best. The problem is that all of these blockchains, every single one of them, exist in isolation. They are islands. Powerful islands, yes, but islands nonetheless. An asset on Ethereum cannot natively interact with a smart contract on Solana. A user on one chain cannot seamlessly access liquidity on another. The entire crypto ecosystem is fragmented into dozens of incompatible silos. And that fragmentation is costing the entire industry. It is costing developers who have to choose one chain and abandon users on all the others. It is costing users who have to navigate complex bridges, wrapped tokens, and multiple wallets just to access different parts of the ecosystem. It is costing the whole space in liquidity and composability. The project we are covering today decided to attack that problem head-on, and the solution they built is something that our AI model flagged as one of the most significant opportunities in the current bull cycle. Welcome to Crypto A Predictor, where we run deep AI-powered analysis on crypto projects so you can make sense of a market that never stops moving. If this is your first time on this channel, subscribe right now. We put serious research and real AI modeling into every video we make for this community, and hitting subscribe is how you support that work. Today, Prom, the cross-chain infrastructure project that is building the bridges between blockchain islands. And the price projection our AI model produced for this coin in the current bull run is a number that made us look twice when it came out of the model. You need to understand the project first. So let's build that understanding together, from the ground up. Let's start by really understanding the scale of the problem. Everything in this video is strictly for educational and entertainment purposes only. Nothing here is financial advice of any kind. Please conduct your own thorough research. Right now, there are hundreds of active blockchain networks. Each one has its own tokens, its own smart contracts, its own user base, and its own liquidity pools. And the vast majority of these networks cannot communicate with each other directly. They are running on different protocols and different consensus mechanisms. They are running on different virtual machines, speaking fundamentally different technical languages. It's a fragmented landscape. Instead of one interconnected financial internet, we have dozens of financial intranets, powerful within their own walls but unable to truly collaborate across them. This fragmentation creates enormous friction for everyone involved. A user who holds assets on 3 different chains needs 3 different wallets and needs to understand 3 different fee structures. And they need to navigate complex bridging processes every time they want to move value. That friction is a massive barrier to adoption. It keeps regular people away from DeFi. For developers, fragmentation means choosing a lane and accepting that you cannot serve users on other chains without building entirely separate versions of your application. That multiplies development costs, fragments liquidity, and makes it nearly impossible to build the kind of seamless, unified experiences that mainstream users expect. The blockchain industry has been talking about solving interoperability for years. Many have tried. Few have made meaningful progress. Prom is making meaningful progress, and the way they are doing it is genuinely impressive. Prom is a cross-chain infrastructure protocol built to enable seamless interoperability between blockchain networks, allowing assets and data to flow between different chains. The project was built with a specific and important design philosophy: EVM compatibility as the universal language. The Ethereum virtual machine has become the standard for the industry. Ethereum itself runs on it. Avalanche, Polygon, BNB Chain, Phantom, all of these major networks are EVM compatible, and thousands of developers know how to write code for it. Prom uses EVM compatibility to create a cross-chain environment where developers can write once and deploy across multiple chains, rather than rewriting code for each. But Prom goes beyond just being another EVM-compatible chain. The deeper innovation is in its cross-chain messaging and asset transfer infrastructure, the actual plumbing. It's the actual plumbing that allows a transaction initiated on one chain to trigger a smart contract action on another chain, or allows an asset to move with full security. It offers security guarantees without the trust assumptions that make traditional bridges so vulnerable to exploits. This is a critical breakthrough for the space. The Prom token is the native asset of this ecosystem, used for transaction fees, staking, governance, and as the economic backbone of the cross-chain protocol. It is the currency of the bridge network itself. Every action in the ecosystem is powered and secured by the Prom token. Let's get technical for a moment, because the details of how Prom solves the cross-chain problem are what separates it from the long list of projects that failed. The core of Prom's technical approach is its validator network. Prom uses a decentralized network of validators who are responsible for verifying and relaying cross-chain messages. These validators stake Prom tokens as collateral, meaning they have real economic skin in the game. If a validator behaves maliciously or incompetently, they lose their stake. This economic incentive structure is what makes the network's security guarantees credible. It's built on decentralized trust, not just a few entities. This is fundamentally different from early cross-chain bridges, which relied on multi-signature arrangements controlled by a small number of known entities. Those designs created single points of failure, which is why so many were hacked for hundreds of millions of dollars. The bridge hack epidemic was a consequence of centralized trust. Prom's decentralized validator model distributes that trust across a broad network. The more validators participate, the more decentralized and secure the network becomes. And the more Prom that is staked in the validator network, the less is available for trading, which has direct implications for the token's economic value. The protocol also implements message verification layers that confirm the authenticity and integrity of cross-chain messages before they are ever executed. This prevents replay attacks and message forgery. This is serious infrastructure engineering, and serious infrastructure is what the industry needs to mature. Understanding how Prom accrues value is central to understanding the investment thesis. So let's break down the token economics in detail. Understanding how Prom accrues value is central to understanding the investment thesis. So let's break down the token economics in detail. Every cross-chain transaction that flows through the Prom protocol requires Prom to pay for the service. As volume grows, demand for Prom grows proportionally. This is genuine utility demand, not speculative demand. It grows with usage. Staking requirements create a second demand layer as validators lock supply. The more the network grows, the more Prom gets locked into staking contracts. Locked supply is supply that is not on exchanges. Reduced exchange supply leads to price catalysts. Governance rights create a third demand layer. Prom holders vote on protocol parameters, upgrade proposals, and fee structure changes. Influence is valuable. Entities that rely on Prom's infrastructure have direct incentives to hold Prom to influence the parameters that govern their operations. Influence is everything. Developer incentives round out the demand picture. Applications built on top of the Prom infrastructure use Prom in various ways to access features and incentivize user behavior. This creates a developer-driven demand component that scales with the number and quality of applications in the ecosystem. 4 demand drivers all growing together. Let me make the macro case for why interoperability is one of the defining investment themes of the current bull market, because this context is crucial. In previous cycles, the dominant narrative was Layer 1 competition. Which new blockchain would unseat Ethereum? Every cycle produced new contenders like EOS, Solana, and Avalanche. Each one attracted enormous capital flows as investors bet on the winner. The current cycle has seen something different. Ethereum is not being unseated, it's maturing. Instead, the ecosystem has matured into a multi-chain reality. There is not one dominant blockchain. There are many, each with genuine user bases and utility. Coexistence is the reality. In a multi-chain world, the most valuable infrastructure is not the infrastructure within any single chain, it is the infrastructure between chains, the bridges and messaging layers. This is the interoperability narrative. It is one of the strongest themes because the problem it solves is structural. It only grows more important as the number of chains increases. Prom is one of the most technically serious projects attacking this problem. It is building in exactly the right place at exactly the right time, ready for the next leap. The interoperability thesis is compelling in the abstract, but let's make it concrete. Who actually uses Prom, and why does it matter for the token? Use cases are the key. DeFi protocols are the most immediate and obvious users. A lending protocol that wants to accept collateral from multiple chains, or a DEX that wants cross-chain trading. A yield aggregator that wants to chase the best returns wherever they exist across the ecosystem. All of these need reliable, secure cross-chain infrastructure. Prom provides it. NFT platforms and gaming ecosystems need cross-chain capabilities to allow assets to move between different gaming blockchains and general-purpose networks. Unity is essential. A player who earns a rare item on one gaming chain should be able to use or trade that item in a marketplace on another chain. Prom's infrastructure makes that possible. Institutional DeFi participants, the hedge funds and asset managers, need to operate across multiple chains to access the full range of opportunities, scale, and security. For these participants, reliable and secure infrastructure is not a nice-to-have. It is a basic requirement for operating at scale. Enterprise adoption relies on these bridges. Enterprise blockchain applications that need to interact with public blockchains while also maintaining private components use cross-chain infrastructure to bridge those environments. As enterprise blockchain adoption grows, this use case becomes increasingly significant. Every one of these generates PROM transaction fee demand. It's a growing market. Prom is not operating in an uncontested space. Let's be honest about the competition and clear about why Prom has a real case for being a serious player. Differentiation is key. The major cross-chain competitors include Chainlink's CCIP, Layer 0, Axelar, and Wormhole. These are well-funded, well-known projects with significant adoption. The competition is real. But here is what Prom brings to the table that is genuinely differentiated. First, the EVM native architecture. It's built for the largest developer base in the industry. Prom's deep integration with EVM environments means Ethereum and EVM-compatible chain developers have the most seamless experience compared to more complex alternatives. Second, the economic security model. Prom's validator staking model creates a level of decentralized security that some competitor designs cannot match. Security is the top concern. Third, positioning and timing. Prom is building momentum at exactly the right moment when the narrative is reaching awareness. Network effects compound quickly in infrastructure. Fourth, the token economic design. Unlike some competitors, PROM's multi-layered demand structure creates a tighter link between protocol adoption and actual token value. Growth rewards the holder. Our AI prediction model ran Prom through the complete analytical framework, and the inputs it processed painted a picture that generated significant confidence in the output. Data doesn't lie. The model evaluated cross-chain transaction volume trends across the entire ecosystem, measuring how fast the demand for interoperability infrastructure has been growing. Future growth is projected. It analyzed developer adoption metrics, the rate at which new projects are integrating with the Prom protocol. This is a leading indicator of future transaction volume and fee demand. It assessed token supply dynamics, the ratio of staked versus circulating PROM, the rate of staking participation, and the implications for available trading supply as demand increases. Economics in action. It benchmarked comparable interoperability protocol performance in previous bull cycles, looking at what happened when their narrative moment arrived. Historical patterns provide the roadmap. Every signal pointed in a consistent direction: strong narrative alignment, growing developer adoption, tightening supply dynamics, favorable competitive positioning, favorable sector timing. Infrastructure sector timing matches historical patterns for significant price appreciation. Every light is green, and then the model produced its projection, the number we've been waiting for. For Prom, in a continued bull market scenario where the cross-chain infrastructure narrative maintains or accelerates its current momentum and where broader market conditions remain favorable, our AI projects PROM reaching a price of $24.24 for a token at its current level. That projection represents a move that is extraordinary, a potential landmark move. The reason the model landed here is not arbitrary. It is the result of benchmarking Prom against comparable infrastructure protocols, the Chainlinks, the Axelars, and identifying where Prom's market cap would sit. It benchmarks where Prom would sit relative to the total addressable market for cross-chain services, $24. That is what the data generated. That is the projection. Understand exactly why. We started this video talking about blockchain islands, isolated, powerful, but disconnected. We walked through the full depth of what Prom is building and how the token accrues value. We covered the cross-chain narrative, and finally, the AI projection of $24 that our model produced after weighing all of that data. That is the complete picture. The potential is clear. That is what we do on this channel. Every time. No shortcuts, no surface-level takes. Real research, real AI modeling, real depth, because we believe that is what you deserve. Quality matters. The single most powerful way you can support that commitment is by hitting the subscribe button right now. It costs you nothing. It means everything to us. It guarantees you are always first in line. Join us today. Subscribe. Drop a comment. Tell us what you think about the cross-chain interoperability space. Are you following projects like Prom? What do you think the biggest narrative is going to be? We read every comment. Your voice shapes this channel. This is Crypto Eye Predictor. We find the signal in the noise. See you in the next one. Stay ahead, stay informed. The market never stops moving. Goodbye.